Hi, this is the SPX Outlook for the last few days of December and early January. As a matter of fact, there's not that much to add from last week's. We are still in that grinding up mode, low volume, probably most institutional investors doing a bit of window dressing, pushing the indices higher to cash in, probably more fees. Although the market is exuberant, we are in a channel that is in fact still sustainable. I said last week that we have those 40-point gaps, a resistance that was clearly identified around 32.45, and we are about there now. There could be another one around 32.60. We can't discard the fact that the market will keep on pushing. That being said, we've had another profit-taking signal. I think it was on Friday or Thursday, and the bullish pressure could abate a little, but we should not anticipate any strong movement before early next year, probably Monday, Tuesday next week. So this is going to be a quiet, bullish week with little to do and little to talk about. The levels are exactly the same as last week, and I do not even anticipate if this 32.45 resistance is broken. I don't anticipate it will be so much of a short squeeze. Maybe the market will just keep grinding up. That said, the market has hovered for the last month in the lower part of this channel. I do not anticipate the market will jump to the upper part, but that is still possible. I think the market should normally get into just a normal congestion over the next few days. In terms of volatility, it is low, but still it's sustaining the 13 level on the VIX, so it's not too bad. Probably a good time to start looking at hedging, either hedging positions for those who are concerned about a sharp reversal, or just putting it proactively, preventively, as the market could be shaken up a little early next year. No need to comment further, and also no need to digress too much in this short video. The range is still very much known and identified, and the support levels, most probably only the first one is still quite far. I would suspect that the market would find buyers to come back into the dip around 3200 or maybe 3150 in. So no major move is anticipated in this channel. If we look at shorter time frames, it is exactly the same picture. We have these support resistance levels going up, which would indicate that on short time frames the grinding up mode is still quite valid, and probably all the way to 3280. But the longer time frames, as you see here on the 4-hour channel, even though this resistance has turned effectively into a pivot, which means that it would be kind of a mid-range from 31.25 to 32.45, about 120 points, or 3 times a quantum gap, and on the downside it would be around 3,000. But we would need to see this level being tested. It was only briefly tested early December. At best we should see some congestion, but I don't even see this level be tested anytime soon. 3200 would be already a good test in the short term. I'm not sure. It is really important to look at the daily chart. Same, very bullish. It is looking in this time frame a little bit too rapid a climb to be sustainable. So the chance of a sudden reversal, if only to the 3180 area, is still possible. So we must be careful, although it is a slower time frame, that we could see. And let's not forget that these support levels have gone down, which, although it does not provide any timing indication, it is a sign that the bearishness could actually creep in slowly. So to conclude, I would focus on this range, 3150 to 3250, and look at possible support resistance on 3200, 3180, 3160, and possibly on the upside reaching 3265 or maybe 3285. Okay, sorry if it doesn't look more assertive. The market is just simply in grinding mode, and although it is not sustainable, this particular time of the year can make the market behave a little bit erratically. That's it for now, and the next video will be on our trades as such. Again, I wish you the best over the festive season, and for those who subscribe to the alert service, I'll see you a little bit later on Slack. Bye for now.